If the news is in favor of your trade, then great. You make potentially like $300. If it goes against you, you lose, say, $100. Say if you risk $100 on the trend. And that's the great thing about it. Okay, so if you're running that wave, you might as well run it to the end.
So Rob Caulfield, welcome back on the podcast. It's been a while, but how are you doing today?
I'm very well, thank you, Etienne. Thanks for having me back. Great to see you back from Southeast Asia. I've been following your progress. Looks like you've been having an awesome time, my man.
Yeah, it's awesome. So we talked, it's been a while. I forgot which episode number, maybe episode around 50 or something, which was like in 2016, I guess, or 17.
I think so, yeah.
So it's been a while. And I want to bring you back here to kind of discuss, because you are kind of one of the people that I aspire to be like, and we're kind of similar in the vision we have about trading and life and everything. So we like to be, I would say, lazy based on your brand, the lazy trader, but we like to be kind of having freedom and doing things that we love and using trading as a means to get there. So I want to kind of tell people what happened with you, give a bit of background about who you are and what people can expect from you.
Oh, sure. Well, I mean, there is a huge misconception of trading, and that's that you have to be in front of the screen all day, watching your trades and nursing your trades, because we are preconditioned into swapping time for money, hence our kind of like our day jobs, I guess, where we've been pre-conditioned to do this ever since the age when we were attending school. But basically, I'm the managing director of thelazytrader.com, which is an online brand dedicating to helping people who basically want the exposure to trading, the benefit from trading, and the skills from trading successfully. But they are busy, they've got lives, hectic family lives, they've got a career path which they're serious about, or indeed they just want to enjoy the finer things in life rather than being in front of the screen all day. Because quite frankly, there's nothing that interesting about watching bars all day moving. And if you're watching your account balance all day with your trading, then you're doing something wrong. You cannot do that because it goes against a big rule with trading.
I think that's something good, the fact that you can do whatever you want with your life when you trade. But there's one thing, so you got to set it up in the right way so that you can do it. You can actually achieve it. So some people that I know will learn trading, then they'll be stuck 24/7 on the chart because they have to look at the chart all the time based on their style. And I think that comes down to basically trading higher time frame, like the daily chart. That's something that people have to kind of work on, I guess.
That's very true. I mean, what we often find are people who come to us and they're intraday traders. So we tell them about the benefits of end of day and end of week trading, i.e. the kind of, it breaks the time money link and it's a very time efficient way of trading. They'll go away some more. They won't listen. They'll intraday trade. They'll hack their accounts apart or kill their accounts by 1,000 paper cuts. And then they'll come back to us and then they'll say, actually, you know what? Let's try end of day and end of week trading now. So generally, people will have to experience the kind of the loss, the suffering of like intraday trading, certainly in my humble opinion, before they're ready for end of day trading. Because a lot of people are out for the instant gratification. They want the quick hit. And we do live in a society like the Netflix generation. If we want a pizza, we make a phone call, we immediately get it within 45 minutes. If we want to hire a car, we can do it at the click of the button. If we want to order like some equipment from Amazon Prime, we can do it in a click and have it delivered in an hour. But unfortunately, when it comes to financial markets trading, we just gotta go with what the market is saying and what it wants to do. And we are like water. We really want to be in the pathway of least resistance, so to say.
Yeah, exactly. So I wanted to kind of dive into more topic that I think you're really good at, which is trading the daily chart. And that's something that, like, in the past when I had a full-time job, I was like going to my job trading in the evening. I would trade a daily chart. Then over time, I moved to a little bit lower time frame. I find these to work better for my style. And so it's been probably like maybe a year and a half that I don't trade a daily chart at all because it didn't work for my style. So I'm curious to hear kind of how you make it work for you. And that's something that I could see myself doing in the future, being able to add more strategies on the daily chart to be able to trade more and kind of have these kind of different strategies to trade with. So what would be kind of the step to start with that if people want to be able to get and build strategies from the daily chart?
Okay, well, I mean, people who don't like the kind of the inertia of end of day trading, then you're not going to like me even more for telling you this because quite frankly, a great way to start is actually on the weekly time frame. So if you really are flat out busy, you've got the kind of pressures that life brings, like relationships, hectic time at work, for example, then what you can simply do is when the markets are quiet, when they're asleep, on the weekends, is look at the weekly time frame, and you can trade that. Place your orders on the broker platform on, say, a Sunday night, or say even a Friday night, or even on Saturday when they're completely closed, and just not look at the charts again until the following weekend. That is the ultimate set and forget trading strategy, or style, should I say. And I feel that certainly a number of our clients, I'd say about 35% of our clients, just do this exclusively. We had an interview quite recently with this guy called Mark, who works at Tesco, which is a big kind of like multinational supermarket chain in the UK. And he's a manager there. He has a very busy schedule, and he just trades on the weekend. He's the best trader we've got on our books. So there is a disproportionate relationship between like the height in time frame you trade and the time spent in front of the chart and your profitability. It's completely disproportionate. I would say that you can get a tighter entry if you're trading the daily time frame than if you're trading the weekly time frame, insofar that you are able to essentially have your entry closer to your stop loss. And generally, the setup is going to be tighter, if you see what I mean. The patterns are relatively smaller. Just the same way as you probably get a tighter entry if you're trading the 15-minute chart, God forbid, versus like the daily chart. Okay, so that's how I would encourage people to get into end-of-day trading. Just don't do it until you're ready, but remember that there is a disproportionate relationship between time and money, and that's the great thing.
So I really want to target that. So explain to me, why is it possible that someone on the weekly chart get more profit than someone on a lower time frame? And is it because the win rate that's higher, or the reward, or something different?
No, the win rate isn't necessarily higher. It's more about just enabling or being in the opportunity flow of bigger swings in the market. I want to say more profitable. I would say you've got a much better time return relationship. Say, for example, you're spending like an hour a week looking at the charts.
Yeah.
And say, for example, you made, say, an arbitrary number like 6% for the month, which is a great return, by the way, not to be sniffed at, versus someone who spends like 4 hours a day trading intraday and they made an equivalent return of, say, 6%. Then the person who's got the better return, money-wise, versus time spent, is the person trading the weekly time frame. Their heart rate's probably down. They've probably achieved more in the time. They're probably more productive doing other things as well. Because there is a big misconception out there as well, and I do blame a lot of the less scrupulous educators, more aggressive educators out there, for basically selling this dream that you can become a full-time trader on like $1,000 trading account. It's just not possible. When you look at, say, a 20% return for the year, which is, I guess, if you look at it from a comparative perspective, like Warren Buffett, he makes 20% on average on investments. I know it's not the same as trading, but that is a very good return consistently over the decades. However, if you're making that return on $1,000 or £1,000, you've made £200 for the year, which percentage-wise is a great return, providing you've trade-sized. But that's not going to pay your bills. It's not going to pay your mortgage. It's not going to pay your school fees. It's not going to pay your car kind of loan or whatever. It's not really going to afford you the kind of lifestyle that you probably signed up to trading to fulfill. This is why I always say to my clients, just use it as a supplementary income stream and a side hustle, if you like, if you give the expression, the colloquialism. Just have it on the side. Have your day job as well, other income streams, because if you're just trading, and trading is the only way you're getting money, and you've got a relatively small or medium-sized trading account and you're inexperienced, then what you're doing is you're placing an emotional attachment to the outcome of the situation. And you'll force trades, your trade settlements that are there, you'll be desperate to achieve an outcome that the market might not be allowing you to achieve based on your strategy and it's kind of like a flow of opportunity, whether it's an upturn or downturn. Okay, so it's very dangerous. So I always say, when people say, well, I've got a monthly target of 5% or 10%, I just say, well, let's forget about the monthly target, because the market doesn't really care about who you are or what your strategy is. Your monthly target will be defined completely by your strategy and whether it's an upturn or drawdown.
And
some people don't like hearing that.
Yeah, of course. And this is something that I remember from our first interview. I was listening to it a few days ago, actually, like what you said there. And you said one thing that I think makes a lot of sense. It's the fact that once you get some profit, once you're profitable over the long term, once you have some track record, people will fund you to give you money to trade for them. So it's not an issue of like trying to get more capital quickly now. It's an issue like building the right returns and then getting capital from other people to trade for them eventually.
Well, absolutely. I mean, quite frankly, I mean, we have our, at the end of the year, we have our brokerage accounts scrutinized by accountants, so we can have it verified. But I would say that if you are profitable consistently, then you can get finance as well. There are various options out there, various companies out there. I believe we interviewed this guy. You interviewed him as well, John Jost, who has got funding by a company, and they've seen his track record, and I believe you and I have had an input into his development, and he's done incredibly well for himself. A chiropractor turned full-time trader. And I say he is a full-time trader because he is trading in the opportunity flow every day. I say I'm a full-time trader, even though I'm trading for like the equivalent of like 10, 15 minutes a day, because I'm always aware of what's going on in the market. And same with John Jost, who we both know and who we both have the pleasure of working alongside. He has just scaled up using this company. I mean, he doesn't need to essentially join a platform and like my FX book and have his results scrutinized for the world at large. He can just do it privately, private income.
Exactly. And yeah, so we'll link below for that interview either on YouTube, so build the video, or on the podcast show notes if you guys want to check it out. Good interview for sure. And John is a student of you, Rob, and me also. That's awesome to know that he's been able to get some success with that. So yeah, that's really cool. So the thing I want to ask you is, how do you handle the objection of the fact that people complain about, well, if I trade a weekly chart, I'll get only like a setup or two a year or something of the sort. How do you handle this?
Well, when people get frustrated with having to wait.
So trying to wait and not getting enough trades on a yearly basis.
Okay, well, that's a very good question. And I will say that people who are itching to place the trade, I do encourage them to buy themselves a dog to go out for walks with, metaphorically speaking, of course. But if people, it's a very valid point you made, actually. And from an intellectual perspective, I guess you can say that, hey, if I'm learning to trade the weekly time frame and there really aren't that many setups, I really can't apply my learning to the live market. And that's a very good point. So what I simply say to people is, why don't you scale down to a smaller time frame and apply exactly the same logic to, say, the 4 hourly. I wouldn't go lower than the 4 hourly, but just apply everything you've been taught on the weekly, like the strategy, to the 4 hourly, so that you do get, hypothetically speaking, you do get more setups. Obviously, have an awareness for news, which doesn't really matter on the daily and the weekly time frame, in my humble opinion, at least. Certainly, my mentor, Larry Pasavento, I mean, he doesn't care about news. He's been trading for about 50 years. He's never cared about news. And it's quite refreshing to hear, actually. But when you're trading intraday, certainly, even if it's the 4 hourly, which is relatively robust compared to the hourly and the 15-minute, I would have a handle on the news. And you can look at, say, I believe it's Forex Factory, which has a full kind of like itinerary of the upcoming news announcements for the day. So anything shaded red, mitigate the risk by moving the stop loss to break even, or indeed scaling out. It's up to you.
Yeah, exactly. I used to care about the news a lot until I met people like you that told me not to look at it. And I realized by doing some tests and looking through that it doesn't matter. It could be with you or against you, and you're gonna win or lose either way. So it's not a big difference.
Yeah. It's like flipping that 50 pence coin, knowing full well that, hey, if the news is in favor of your trade, then great. You make potentially like $300. If it goes against you, you lose, say, $100. Say if you risk $100 on the trade. And that's the great thing about it. Okay, so if you're running that wave, you might as well run it to the end.
So what are some of these strategies people can use on, let's say, a weekly chart or a daily chart? Is this different than lower time frame? And what are you kind of like your favorites?
No, I would say I trade exactly the same strategies really on the smaller time. Well, I would apply it to the smaller time frames if I was trading the smaller time frames, but I don't. I ban myself from the smaller time frame because I just, I've got a butterfly brain. I know my own limitations. I've got a short attention span. I like just to do high intensity kind of workout or market analysis and get it done, and then do something else in kind of bursts. That's me, and I've chosen a style of trading to basically be compatible with my personality and what I want from the market. But in answer to your question, I love, excuse me, I love trading reversals, and I know they've got a lower probability, but with that comes a higher reward, so that even if you may have more losing trades than winning trades, the winning trades really well make a good amount of return, providing you are not fearful when you are finally on that kind of big wave. And one thing I look at are major levels of support resistance. I start off building a position looking at supply and demand. Say, for example, let's just take an arbitrary example, like, let's say, the British pound versus the US dollar as we approach 1.200. And that level is a big level of support, a big buy zone, level of demand, also known as. So if I was to be aggressive, I'll place a buy order on that level and have my first order to buy on that level with a stop loss, say 150 to 200 pips away. And then what I'll do is if I get a bullish pin bar reversal, say on the weekly or the daily time frame, then I would mitigate risk on my first trade, adjust the stop loss so that I've got like a free trade or some percentage left where I'm not risking more than my usual 2% to place on a second trade. So if it's a bullish pin bar reversal, I'll trade it like a price action based buy. And that would be my second entry of a larger position. And then I'll see what happens. I'll manage it according to my pin bar strategy. And my third opportunity, if I get it, if the market gives it to us, will be the first higher low if we go long. Now, I know that Brexit is, I guess, a once in a generational event. And it is, the market has factored in the imminent no deal scenario we're having with the Euro lot, the Europeans. But if that really does happen, who knows what's going to happen? I mean, the level could break. If it does, then we'll be able to trade quite quickly at a loss, not risking or not losing more than 2% because I'll never place a second or third entry risking more than 2% overall, okay, out of the free position. We call adding on. This is why I say it's building a position. So, yeah, I mean, irrespective of Brexit, that's the way we're going to trade the British pound versus the US dollar. And I know that I'd probably be better to illustrate this with a chart in front. But just in answer to your question, I think supply and demand, that's the most aggressive way to trade. But if it's got two previous tests of support and resistance, then I'll look to essentially buy or sell respectively, and then look to build a position thereafter if the conditions are right.
Okay. So is that where most of the money is made, by kind of scaling in the trade, so adding more positions over time? Or is it more with just finding the right trade?
I would say building a position over time is great, because what it enables you to do is gently add to a trade, not scale in, but add when you've got more evidence that it is actually going to be a long-term winner. Say, for example, if you get the first test on a level of support and resistance, that's the first great sign that it's respected the horizontal, well-respected, say, 10-year low or high. Great, that's the first clue. Your first trade is there. The second clue is a price action-based one, which is, say, a bullish or bearish pin bar reversal. And if that works, then great, you've got your second clue that things are going in ultimately the right direction, and you've been afforded a second opportunity to take advantage of that. And then the third opportunity is if you're going long, for example, it's the first higher low. And if you're selling, for example, it would be the first lower high. So I would say that is where our best trades have been historically. Say the British pound versus the Swiss franc. In 2015, that's probably the best trade we've ever taken through scaling in multiple times. I know it probably sounds like a very long time ago that this happened, but this trade lasted from, I believe it was November 2015, all the way through Brexit, basically, that saga in 2016. And guess what? The British pound versus the Swiss franc has gone to the other extreme of that enormous range it's been in, and it's ricocheted off that other well-respected level of support. And some of our traders have bought off that level and have benefited from literally buying the floor.
Do you find yourself also trading trends or only kind of reversals in the market?
I trade trends as well. I like trading harmonic free wave patterns, for example, with trends especially. But ultimately, I actually prefer reversals because I like being proved right one big move multiple times. But with trends, I know it's a kind of trading 101. The trend is your friend until the end where it bends. In my formative years, it might sound crazy, but I actually found trends difficult to trade, actually. It was very strange. I know they're meant to be a lot easier than reversals, but I always found myself kind of second guessing myself back in the day, back in 2008, 2009, when I first discovered trading. But I gravitated towards reversals because I like the flexibility in terms of the multiple pronged attacks you had with various setups that did come to fruition. But in answer to your question, I do trade with the trend, but I do prefer, say, buying dips in upward trending markets via the way of like a free wave harmonic ABCD pattern and selling runners in downward trends via the same method, basically.
Mm-hmm. And how do you deal with taking profits? Is that something where you scale out over time, or you have multiple levels to take profit?
Yeah, absolutely. I mean, I scale out these days. So, for example, if I have a one-to-one, I've made the equivalent amount of profit that I've risked on the trade. Then what I'll do is, if I'm selling, I'll buy back half the position and let it run to my second target. Okay, my first objective is to break even, and I look to do that. Because if I scale out at a one-to-one, then basically I've got a free trade, even if I don't move my stop loss. And that's the bonus. That's the sweet spot. That's actually, weirdly enough, that's the last part of the jigsaw puzzle I discovered. And my trading, since discovering that scrap of information a number of years ago, really did help my trading a lot.
That's something that I've been kind of debating about a little bit for myself with my style, because I also kind of tend to scale out at one-to-one. I used to move my stop loss to break even at that point. So move the stop loss to the entry when the first take profit's triggered. And I found that I would be stopped out too often. So I stopped doing that. And have you found something that works better for you? Or I guess it depends also on the market volatility, how price moves and stuff. Because like now would be a good time to, from what I've seen, move the stop loss to break even, because they get pushed often also back to the entry. But I'm curious to see what you've found with that.
No, and it's a very valid point. And intuitively, you do want to, say for example, you're at a one-to-one. Intuitively, you do just want to move your stop loss to break even. And I went through this certainly many, many times where I'll think, yes, I've got a free trade, so I'll move my stop loss to break even without scaling out. And I'll find that I'm literally just spiked out, and then the market completely goes in my favor. I'm not in the trade. It's the most exasperating thing. So I always found that scaling out without moving your stop loss, first off, enables you to be in the trade. You've got the comfort of a free trade. You don't have to move your stop loss, and you do have the ability to weather the storm in terms of that first spike, that first mischievous spike that comes to seduce, like kind of goad you into exiting the position. And you go back to your charts, you'll see it's just a random spike in the daytime that just came. It's a stop hunt, basically. It would feel like a lot of the time when that happens. But yeah, I think scaling out really does mitigate that kind of inevitability.
Okay. And so what do you count people that will say, well, if I trade only 1 hour per week, then I got to work on something else during the week. I got to kind of, I guess like they want to take trades during the week. So how would you kind of recommend them to work on that? Do they work on something else about trading? Do they kind of back this more, do something different? Or what would be kind of the best use of the time during the week?
Oh, so people who are available to trade in the week,
yeah,
but they are not. They're trading the weekly, but they're available to trade in the week.
Yeah,
I would say simply trade the daily time frame. Of course, do your analysis. You're not simply confined to currencies, by the way. I always say to my clients that they've got many stocks out there. You've got the FTSE 350. Of course, you've got the Dow 30, the S&P 500, the Russell Index, 2,000 stocks. Goodness, the world's an oyster. You've got the CAC, the DAX. You've got so many stocks. And, of course, you've got commodities, precious metals, and so the more exotic currencies as well. And, like I said, currencies, people say, oh, do you trade euro NOK? Goodness, really? I'm like, well, yeah, I just treat it the same way as I would another currency pair. I analyze the story it tells me on the chart. And I, of course, look at the interest differentials between both, say, Europe and Norway, and establish whether it's going to be cash daily rolling or indeed a futures contract, and take it from there. But ultimately, I don't discriminate just based on the asset class. What is really frustrating, though, is say you've got a great setup on, say, a stock or a commodity, and you go to your broker and you realize they don't list it, and he's thinking, oh, it's the most frustrating thing in the world when that does happen sometimes. Say, if the FX market, like currently, actually, it's kind of devoid of opportunity, and August generally is, historically speaking, for me at least, a bit of a kind of like a drought month when it comes to opportunity and the kind of like inability for the market to come to any kind of consensus. So that kind of prompted the moves to look elsewhere, fish in other ponds. And I've been looking for commodities this morning. And I just like waiting for a pullback with coffee at the moment. Obviously, it's just come off its lows. But I just take the same logic I've learned to currencies. Currencies is the default. I just apply it to a commodity or a stock. Very easy.
And so how did you find any pairs or any instrument that were not profitable with your style that you just cannot trade?
Penny stocks. I wouldn't, and the less liquid the stock, I wouldn't bother. So if they're, for example, like Britain, we've got this market called the A market, alternative investment market. I wouldn't kind of trade on that because it's prone to manipulation, gaps, and a lot of the time brokers will, if the stock or asset class is gapped against you, you'll be penalized beyond your risk parameters that you committed on a trade. And of course, if it gaps in your favor, then there'll be something in the small print that means that you don't get rewarded for the gap in your favor. So I would always go for the more liquid stocks, but I would treat it the same way as I would a currency, basically.
And so all the currency pairs you found were working well with your style, or you had to kind of cut some of them?
Well, quite frankly, I haven't traded every stock there is. So I look at the Dow 30. That's my mainstay. I'm quite comfortable. I'm very comfortable with the level of opportunity currencies and precious metals give me overall. I trade about or actively analyze with the view to trading about 26, 27 currency pairs. And when you look at silver, platinum, gold, oil, the Dow, the FTSE, and the S&P, then that's fine. That's enough for me. But I was just simply saying for people who do want other opportunities and they aren't happy with the level of opportunity that currencies are giving them. Say, for example, opportunities are like busters, they arrive all at once or not at all. I always say to myself, embrace those times when there might be fewer opportunities than, say, previous months. And I do embrace it. But I'm just simply, the advice I'll give is to new people who've come to trading and they are looking to analyze or look for opportunities based on the strategies that we teach. I always say, well, why don't you scour the FTSE 350 or the Dow 30 and see if you can find any kind of stocks with, say, a three-wave harmonic pattern or approaching a multi-year high or low that you could potentially trade a supply and demand entry.
I need to ask you this from a kind of, I guess, instructor standpoint. So when you teach people how to trade, so what we found is that you probably use the same thing like support resistance areas. So some people have a hard time doing that, and they have a hard time placing them the right way or the same way as you do. And based on that, they will get different results in trading. These kind of like subjective things. So how do you make sure people know what to place the line, the zones at, and how that they place it right? Is it like a way you found, or?
Well, that's a very good point. And there is always a lot of, interestingly enough, I always have found that there's a lot more variance when it comes to trend lines and horizontal levels.
Okay.
And it is a sticking point for a lot of people, like where do you place those horizontal levels? So what I do is I say, just line up as many points as possible. And if you've got a few, for example, false breakouts. So if you do have that false breakout, say, for example, I believe if you look at, I think it's the Dow 30 at the moment, if you look on the weekly, you've got like, it's just come off an all-time high on the monthly, for example. So that would be the second test. So if, for example, we see a pullback, the Dow goes down in value and comes up and tests that level again, what I would say to people is have an order on the point which intersects both tests, October last year, and of course last month with the Dow 30, but place your stop loss above the false breakout point on the monthly time frame. So that would be last month, which met the all-time high on the Dow 30. So I would always say, put your stop loss behind a false breakout, put your entry on the level which intersects the most points. Okay.
And this is something I'm curious about. Have you found the, let's say like the close, the highs, the lows on the monthly chart to be kind of support and resistance areas on the lower time frame, or is this kind of irrelevant?
No, I always look, for example, start on the monthly, go down to the weekly and go down to the daily, then the 4 hourly. I would always say that's good practice because, quite frankly, you're going to get like cycles within cycles and levels within levels. A lot of the time you don't see, like say if you're trading the 4 hourly, you can't actually see the monthly level, for example, because the chart doesn't have that much data. So I'd always say trade the monthly horizontal level according to the way you trade the monthly time frame. Trade the weekly levels according to how you trade the weekly time frame, and just keep them exclusive to that time frame of trading.
And what about the high and the close of a candlestick on the weekly chart or the monthly chart? Do you see any effect on that? Because, like, for example, in stocks, the close or the high price of a day is going to impact the next day, right? It's going to be like either resistance or support for the next day sometimes. So what about in the higher time frame? Does that work too or no?
No, if, for example, I'm seeing like there's momentum, for example, say if we're looking at certain asset class. Let's say, for example, the Dow, we've got 3 bars where the high is very close to, the close is very close to the high of the bar, then that's a very bullish signal. Okay. Mm-hmm. And that's fine. I mean, that is irrelevant to the way we would enter the market or exit the market, okay? So that for me is just an observation in terms of what the market is doing. However, say for example, we're in a trade. Say for example, we took like a bearish pin bar reversal off a multi-year high, and we saw like 2 sell bars after that, and then 3 buy bars. Then we do have this rule that if we're in a trade and it doesn't do anything, i.e. go in our favor for say 4 bars, we just kill the trade regardless. So we've got a time-based kind of like mechanical way of just killing a trade if it doesn't behave itself, basically.
Mm-hmm. That's interesting. That's something that I think makes a lot of sense for most people to have. And it's a bit tricky because you can look at your stats and understand what happens when and take some research, but I think it's a good idea to implement for sure. So let me ask you this. What have you seen to be kind of your students' top mistakes when it comes to trading on higher time frame? What did they do wrong often?
I would say the biggest sticking point a lot of people have, and this is something I was speaking last week in one of our webinars, was, okay, it's one thing to be a lazy trader and just benefit from the time and return relationship between, like, you know, having exposure to the market, good strategies, and a good ethos, but becoming so lazy that you actually get used to not trading and that you actually don't look at the charts at all, and you forget about orders which you've placed, you forget about trades that you've been triggered into. You've always got to, regardless of like your kind of chosen time frame, you do still need to get into good kind of habits. For example, weekly scouring the market for opportunities, managing trades, and it just comes with, like, for example, washing the dishes, for example, or hoovering your bedroom, or something like that. Just a mundane chore. I just see it as a chore, but you've got to do it if you're going to benefit from it. But just because you've got a hands-off style of trading, like lazy trading, it doesn't mean that you don't have to do anything. That's
a very good point. That's something I've seen a lot, especially when traveling, because like you get used to being in a different place, being in the same environment, kind of lose space and time. So how did you solve this? What's like the action step for people to stay consistent on it?
Well, and that's a very good point. When I was traveling Southeast Asia a few years ago, just like yourself, Etienne, I actually struggled with just, you know, because traveling, it is exhausting, as enjoyable as it is. You do kind of lose a sense of time, and there's jet lag, and you think, okay, well, I just had a 12-hour flight to, say, Myanmar. The last thing I want to do is look at charts. But one thing I do is I have an awareness in advance as to what, before I travel, as to what setups are likely to happen, and I mentally prepare myself. Like my watch list, I've got an awareness for my watch list, what opportunities could happen, what entries could occur whilst I'm in the air flying, and what trades I need to talk about. So it's like a mental rehearsal, if you like, rather than just kind of being confronted by like a sea of chaos when you turn on your laptop when you've just checked into your hotel and thinking, oh damn, all these opportunities I missed, or all these trade setups I forgot about, or all these orders I forgot to delete, or all these take profits signs I did not take profit at. You know, that's the worst, isn't it?
I solve most of this with automation now, with having algos that run and take trades, which really helps. But there's still things that you still got to check your algos for sure. You still got to look at them and look at your results and everything. So still, yeah.
No, it's very true. But I cannot extol the benefits of mental rehearsals enough, really. I think, like, for example, today, I know that, I knew when I was at the gym, I'm going to talk in my Market Insider webinar, I'm going to be talking about like 5 specific kind of like items on the watch list, and it will help me kind of like, you know, get into the state of flow later when I sit down and do it, or maybe tomorrow when I get around to doing it. So, you know, and it means that I won't forget about it. So I've got it all written down as well. That helps. But I will be traveling over the next few days, so it will help to kind of like ingrain what I've got to talk about and what we're looking at doing in terms of our trading strategy around these kind of 5 specific currency pairs and instruments.
Yeah, that's a really good point. That's something that I think makes a lot of sense. And I found for me, when I also tend to kind of visualize what happens when I get to a place, like when I get to Bangkok, then I won't do this, but I'll do this, because I know like what's going to happen there. So if you visualize when you're going to work on something and do something, that helps to kind of do it when you're there.
That's the thing. And of course, some airlines, you do have instant access, but I think it's
No.
$20, 10 megabytes. I mean, that's enough to like read
Yeah.
a WhatsApp message, isn't it? Don't fall into
No.
that trap. It's very easy to spend money that way.
Yeah. And that's the money that's spent uselessly, of course, in the airplane for Wi-Fi. Not the best way. Yeah.
I fall into that trap once or twice where I've kind of like gone for the unlimited Wi-Fi. Did not read the small print, and I ended up with an enormous credit card bill. Enormous. So yeah, last time I do that. So I think it's nice just to, when you're in the air as well, a long haul flight. I actually quite like not being connected.
Of
to
course.
You know, bombarded with notifications, emails, messages, phone calls. It's just nice just to kind of think, well, I've got no option but to drink good wine and watch a few films. How about that?
There you go, exactly. So what's one of your favorite destination to travel to?
I travel in terms of destination. I mean, like your good self, I've been bitten by the Southeast Asian bug. I mean, I went to Myanmar earlier this year. Last year, I went to Cambodia and Vietnam. Fantastic places. I'd say Cambodia was one of my all-out favorites out of all of them. I'd say Siem Reap. We went to Batam Bang and Phnom Penh, the capital, in a kind of a triangle. But in terms of where I'm going to next year, I'm going to China based on the MBA course I'm on, and I'm looking to go to New Zealand after that. So these are new countries. I can't vouch for them, but I've heard that certainly New Zealand's great fun. I'm not so sure about China, but we'll have to be.
You like China, yeah? You probably like it, yeah.
I'm sure I will.
Awesome, thank you. So I appreciate that. I want to kind of wrap it up to respect your time and to not be over limit. But so what can people find you? They'll connect with you or reach out after this podcast or video. What can they find you?
Okay, if people want to find out more, just simply go to www.thelazytrader.com and you can download our free guide. Click the link that Etienne gives you as well, and you'll be on our mailing list, and we'll send you some helpful information that you could certainly benefit from. If set and forget end of day or end of week trading is your thing, or you like the sound of it, then certainly do that. Or you can just drop me an email, rob@thelazytrader.com, and I'll get back to you.
Yeah, and we're planning on doing a live event together soon online, like a free event for people. So we'll put a link for that below as well. You guys check this out. Sign up for the event. We might have the date now or not, but we'll use the details below. And if not, we'll send you an email when we do it and stuff, so you can sign up first. And that's gonna be cool. So you get these people what you learn and you experience and stuff, so they can learn with you. That's gonna be awesome.
Yeah, sure. Well, it means we have people from all walks of life in our online trading communities. So certainly we look forward to welcoming more people. We've got our new forum moderator, Chris Rivali, who is fantastically passionate about trading in its purest form. So you'll be in good company, and you'll have myself overlooking it as well if you do decide to come on board and download that information. And Etienne, it's been great catching up with your good self, mate. Keep on doing. You've done such a great job with Desire to Trade.
Yeah, of course. So I want to thank you guys for being here today, for watching this interview, and we'll catch you pretty soon.